So, you want to learn bookkeeping. Cash Bank Reconciliation. By Dave Marshall. Banking terms. Believe it or not, I've actually run across so-called bookkeepers that could not prepare a bank reconciliation. Of course, often the owner was not even aware that they weren't being done. Hopefully, if you're a bookkeeper, manager, or owner, this doesn't apply to you, or you're taking this course to remedy the situation. This task is not really difficult and really only requires applying some organization, logic, and common sense. Can you get by without doing them? You probably could, but I sure don't recommend it. Cash is a critical business asset and should be managed as such. Performing monthly bank reconciliations is just one of the tasks of properly managing cash. What is a bank reconciliation? A bank reconciliation is just a record that is normally prepared each month after you receive your bank statement from the bank for the month. The record compares what you recorded in your cash records with what was recorded by the bank in your bank statement and provides proof as to the accuracy of your cash balance. Why is a bank reconciliation important? Bank reconciliations help to identify discrepancies before they become problems. Periodic bank reconciliations also help to catch fraud and cash manipulations quickly to minimize damage to the company. Why is the balance per bank statement and balance per checkbook different? Timing is the answer. Some transactions recorded in the checkbook have not yet been processed by the bank, and some transactions processed by the bank have not yet been recorded in the checkbook. What's the terminology I need to be familiar with? As of date is the date you pick to reconcile your bank balance with your checkbook balance. Cutoff date is the date that the bank determines and uses to prepare your bank statement as of a specified date. All your banking transactions, deposits, checks, and other adjustments that the bank has processed that have occurred prior to and including this date are included in your current monthly bank statement. All transactions that occur after this date are included in your next month's bank statement. Checkbook is a record that is used to keep up with the balance in your bank account and in which you record all your deposits, payments, and deductions that either increase or decrease your bank balance. Bank draft is a document that authorizes a deduction to be made from your checking account. A common example would be a draft that is taken out of your bank account each month for insurance. Check is a document used to transfer funds from one business or individual to another business or individual. The check is made payable to the payee, individual or business receiving the funds, and is signed by the payer, individual or business paying the funds. The check is drawn on a bank or financial institution where the payer maintains their checking account and the funds are transferred from. Deposit slip is a document used to summarize and record checks and cash received that are deposited in the bank. Deposit book is a record that contains the blank and completed deposit slips used for preparing the individual daily deposit slips. Usually the slips are treated so that a carbon copy is provided. The original is used for making the deposit in the bank. Bank fees are fees that a bank charges for providing various services to their customers. A common example of a bank fee is the monthly statement charge. Credit card fees are the fees that a business encounters in order to provide the capability for their customers to use their credit cards when making a purchase. The credit card service provider charges various fees to the merchant, such as a monthly statement fee, processing fee for each transaction, and usually a percentage amount for each transaction processed. Direct deposits are deposits that are sent to and directly deposited in your bank. The bank usually sends a notice to their customers to alert them that the deposit has been made on their behalf. A common example that many businesses should be familiar with is the daily transmittal deposit of all their customers' credit card sales processed by their credit card provider. Outstanding checks are simply checks written by a business or individual that have not yet been processed and cleared by the bank. In other words, they are checks written that have not yet gotten to the bank. Deposits in transit are deposits made by a business or individual that have not yet been credited to your account by the bank. Usually, this results from making a deposit for a day late in the afternoon or evening. When referred to when preparing a bank reconciliation, the deposits in transit are the deposits that have been recorded in the business's records but have not yet been recorded in the bank's records. NSF is an abbreviation for non-sufficient funds. This occurs when a check you receive and deposit in your bank account is later returned to you because the check was no good. In other words, your customer or whoever wrote the check did not have enough money in their bank account to cover the amount that the check was written for. What's involved in reconciling your bank account? Selecting a reconciliation, as of, date. You can actually reconcile your checkbook balance as of any date, but the common practice is to reconcile your bank balance with your checkbook balance as of the end of the month. The date you select is called your, as of, date. As we learned in the introduction, a cutoff date as defined and used by a bank is the date that the bank determines and uses to prepare your bank statement as of a specified date. All your banking transactions, deposits, checks, and other adjustments that the bank has processed that have occurred prior to and including this date are included in your current monthly bank statement. All transactions that occur after this date are included in your next month's bank statement. Your bank's cutoff date has an effect on the number of checks that you'll have listed as outstanding and the number of deposits that you'll have listed as deposits in transit. If you pick your reconciliation, as of, date as the end of each month and your bank's cutoff date as the 15th of the month, you'll have 15 days worth of transactions for your month that the bank statement will not have listed on the statement. On the other hand, if the bank's cutoff date is a date close to the end of each month, such as the 28th, there will be very few transactions that you have recorded in your checkbook for the month that are not also listed and included in the bank statement. So what do? One solution is to request your bank to provide your business with a cutoff date late in the month. Another possible solution would be to use the bank's cutoff date for the month as your reconciliation, as of, date for the month. In other words, you would reconcile your bank balance and book balance as of the 15th of the month if the bank's cutoff date for the month was the 15th. Why doesn't the bank have the same cutoff date for all its customers? By having different cutoff dates, the bank is able to smooth out their work effort and manpower requirements. Instead of having to prepare and mail out all their customer statements at month end, they can stagger this task and mail some at the beginning, some in the middle, and others at the end. Maintaining accurate and complete records. In order to be able to properly perform a bank reconciliation, a business needs to maintain a record of its deposits and receipts. This record may be a checkbook, check register, or a computer-generated cash report listing the deposits, checks written, and the current balance of the checking account. If an accurate and complete cash record is not maintained, it turns the simple task of preparing a bank reconciliation into a hair-pulling nightmare. Also, if cash drawers are not balanced and reconciled daily, deposit tickets are not prepared for each day's receipts, or deposits for different days' receipts are commingled, it further compounds the task of reconciling your bank accounts. I didn't say you still can't reconcile your bank account. It only makes the task more time-consuming if good records are not maintained. You should use your checkbook, check register, or input the information into your computer program promptly for all checks written, deposits received, or any other transaction that affect your cash balance. Don't forget to make entries for monthly bank maintenance fees, check printing charges, return checks, customer bad checks, bank drafts for insurance or loan payments, or any other charges. On the flip side of the coin, deposits, be sure to make entries for credit card transactions and any related credit card processing fees that are automatically deposited in your checking account. What records do you need to perform this task? Checkbook, check register, or computer-generated cash report for the month. Deposit book and duplicate deposit slips. Daily cash reports. Cash receipts listing for the month. Cash disbursements listing for the month. Prior month's bank reconciliation. Bank statement for the month including your actual canceled checks and any other notifications from the bank. Bank reconciliation steps. The bank reconciliation process requires some detail analysis work. Every check amount on the bank statement must be compared to the check amounts in the cash account. Any differences, such as the company's outstanding checks and errors, will become part of the adjustments listed on the bank reconciliation. Every deposit on the bank statement must be compared to the receipts recorded in the company's cash account. Any differences, such as a deposit in transit and/or errors, will become part of the adjustments listed on the bank reconciliation. Other items on the bank statement must be compared to the other items in the company's cash account. Any differences, such as bank fees, checks returned because of insufficient funds, collections made by the bank, etc., will be part of the adjustments listed on the bank reconciliation. Organize your checks. If your bank returns your checks in your bank statement and the checks aren't already sorted in numerical order, you need to take the time to put your checks in numerical order. I hate to do this, but it makes it a lot easier if you need to later locate and review an actual check. You also need to review all the checks and make sure that all the checks have the proper amounts, signatures, and endorsements. Review your checkbook. Next, you need to review your checkbook for any omitted check numbers or deposits. In other words, double-check that all your cash transactions have been recorded in your checkbook. Since your checks are numbered, look for any missing numbers in your checkbook. Likewise, if you assign a number to your deposit tickets, all you need to do is look for any missing numbers. You also need to check your additions and subtractions and your calculated balances to make sure that the checkbook balances have been accurately calculated. While performing your review of your checkbook, also be on the lookout for any transactions that were accidentally recorded twice. Compare deposits recorded by bank and deposits recorded in checkbook. Compare checks recorded by bank and checks recorded in checkbook. Compare the bank statement and checkbook for any other transactions not recorded in the bank statement and checkbook, such as bank charges. Prepare the formal bank reconciliation.